Good morning from Victoria, BC. Today we are going to talk about whale games. Something that beginner investors like myself, presumably yourself, have to deal with. So what we are dealing with here is the economies of scale. Basically, when you're dealing with investments in higher increments, then you need a smaller percentage in order to make gains from those investments. So let me give you a bit of an example that I've basically worked out in my head. So if you have $1,000 worth of, say, one company's stock, then you need a 50% gain in order to get $500, which to a whale, $500 is not even an increment. So if you take that same scale, so with $10,000, if they want to make $500, then that is literally 5%. So you can see they only need a much smaller gain to make the same exact amount of money, and it becomes very easy once you're at that level just to make considerable chunks of money. And so the game is rigged in favor of the whales. And you're not likely to see 50% gains and things like that unless you're in a bull market, and then almost every kind of investment can pay off there. So the question is then, how do you adjust your investment strategies in order to not get crushed by whale games? And so I tell you my personal thoughts on this, and that's by, if you're investing in smaller amounts, $100 at a time, $500 at a time, then put them into something that is going to be stable in its growth and provide some kind of cash flow yield, ideally. So something with a dividend and growth potential. So there are many potential stocks, assets, real estate trust investments, REIT investments that can fit that. And that's up for you and your own research. I have a few that I recommend. But again, the question is, how can you avoid getting crushed by whales? I mean, when you have enough money, when you're working with $10,000 is a minor increment for them too. I mean, we're talking millions of dollars, even billions. In some cases, there's whales playing with more than that. So when you have that much money, then you can create actual changes in prices. You can control the prices and manipulate them at will. And we see a lot of that, especially in crypto and Bitcoin, where the whales come in, and if they want to buy low, then they can start selling just a little bit, and this is going to push down the value, creating fear. And then we have everybody, retailers that are in smaller amounts, getting scared. They sell. This pushes the price down even further, which is exactly what that whale wanted, because now they can buy in at whatever price they intended, and they can just repeat these games indefinitely and keep adding to their millions and billions of dollars. Again, the game is rigged in their favor. So you can take from that, especially the lesson of not reacting with fear in your investing. So when you see those prices and values start to go down, then you need to really ask yourself, have the fundamentals changed? Do I still believe, based on numbers and my own due diligence, in whatever I've invested in? And if so, and these are macro fluctuations, then there's no need to react with fear in those investments. And by doing that, that's one big step into not getting crushed by whales. Best of luck to everyone. May the market force be with you.